Thank you, Mr. Speaker, and I'd like to thank Chairman Henserling for his leadership on this issue as well and for considering this bipartisan legislation today. Mr. Speaker, the ever-growing burden and complexity of financial regulations has created an environment of difficult choices for community banks and credit unions. Often, they must choose to incur the costs of complying with the regulation or cease to offer the financial product the regulation modifies. Whatever choice these community institutions make, it is the local consumer and the local economy that loses. Burdensome regulations drive up the costs of financial products and limits choices for consumers, which decreases a community's access to financial products and services that help their families to be able to buy their first home, to help small businesses grow. In districts like mine in Colorado, that amounts to real economic impact, especially in towns where the community bank or credit union on the corner is the only true access to credit that the community has. When smaller institutions are unable to absorb the costs of additional compliance, it's the small towns across America who are disproportionately affected. As one banker from Colorado recently wrote me, we've seen time and again the impact of this regulatory environment consume many hours and resources of our compliance, credit, and audit teams, despite the relatively simple business model that we follow. Mr. Speaker, that's why the bipartisan TAILOR Act's consideration on the floor today is so important. The TAILOR Act directs the federal financial regulators to take into account the risk profile and business model of institutions as they develop new regulations, making them more targeted, more deliberate. The TAILOR Act also instructs regulators to weigh the impact that new regulatory burdens will have on smaller institutions, meaning real burdens that the smaller institutions will have to deal with, meaning real relief from the compliance for the burdens of community banks and credit unions. To put the impact of regulations into perspective, the Dodd-Frank Act alone created 400 new rules and came with 30,000 pages of explanation. In my travels across Colorado, I've heard far too often that community institutions have been forced to stop making home loans or loans to small businesses because they can't afford to hire more employees to manage the added compliance paperwork. The TAILOR Act would make sure that the compliance burdens are considered when new regulations are made, so the community financial institutions won't have to choose between the needs of their communities and complying with regulations out of Washington, D.C. Community banks and credit unions need to be able to prioritize their customers and the needs of their communities instead of prioritizing compliance with heavy-handed regulations. One community banker from Colorado brought this into focus when he wrote me, saying providing a real-time view of risk and continual review of such a risk applicable to each financial institution allows regulators to direct their attention to developing issues that could have the most damaging effect. With the number of financial institutions declining to historically low levels, the redeployment of focus based on complexity makes sense. Mr. Speaker, in Colorado, mortgages haven't been made. Loans to expand small businesses have been denied. Retirees and recently employed workers have been turned away, and relationships between community bankers and their neighbors have been discarded. In a one-size-fits-all approach to regulating, the financial services industry has resulted in decreased access and much-needed credit. America is now in a position to be able to address this. The trickle-down effect of regulation intended to respond to the culpable actions of the big banks after the 2008 financial crisis is harming Main Street and the ability of everyday Americans to be able to realize their financial goals. Directing the regulators to refocus their regulations will help Americans start achieving their goals once again. Once more, the regulators themselves have acknowledged the need for tailored regulations. Both Treasury Secretary Mnuchin and Federal Reserve Chairman Powell have acknowledged the significant need for a return to common sense in the financial regulatory landscape. Mr. Speaker, the TAILOR Act, which passed out of the Financial Services Committee with broad bipartisan support, does just that.